Good morning. Welcome to My Compound Life. This is a channel where we build assets, we build habits, and we build freedom. And that should hopefully be financial freedom for all of us. I'm your host, Jonathan. Good morning. It's a very early morning on the 5th of December. Just about to head the gym. I kind of figure out, well, I recently saw some stats on my YouTube channel, MyCompoundLife, that many of you actually are also early birds like myself. So I just thought maybe I would drop a video early-ish just before I hit the gym. And yeah, here I am. If you haven't already done so, please drop a like, hit subscribe. I think I'm on my 12th subscribers count, and yeah, it would be really good if more of you can follow me. This is, by the way, a daily Bitcoin video. We'll talk about Bitcoin and its overall performance for the day, and then hit you guys with some good news, hopefully good news, or hopefully no news. No news are usually good news for Bitcoin. You know, at present we are currently retracing between 92 to 93,000, right? So I think I've spoke about 94,000. It's something we need to break, and we need to break it fast, right? If we cannot break it, very likely it'll get back to about 90 and then drop from there, 90 to, you know, probably 80, right? So we are definitely hoping there will be some sort of more excitement, plenty of tailwinds before, but not too much excitement recently. So yes, we have been retracing between 92 to 93, but it does seem today, this morning, we might be trending lower, right? So the Asia market has obviously opened, doesn't seem to have too much buy pressure, hence I think, you know, we are at the lower end of 92,000, so about 92,100 USD, by the way, on Bitcoin. So we also take a look at the fear and greed index. The fear and greed index this morning, it's about 28. So we are in the fear zone still. Actually today has been a slight improvement compared to yesterday. It was 26. So we are kind of retracing right now. So in a way, for the past past 7 days, we have been retracing at around 26. Okay, and of course we have gotten off from the extreme fear of past 30 days. So as a reminder, Bitcoin had a very, very sharp drop since 10th of October, right? So we're nearly 2 months now, and ever since that huge liquidation event on the 10th of December, so much drop had happened. There has been further drop onto, I think, down to about 78,000, right? And there has been some recovery that brought us back to 92, 93,000, mainly last week. However, in the recent 1st of December Monday event, I think there has been some algorithmic sell-off where people are doing some rebalancing. There has been some FUD from Japan for their carry trade. So it has kind of resulted, all of a sudden, from 92,000 it fell again from recent Monday, and then we have, well, definitely performed a V-shaped type of recovery back to 92,000 again. Okay, so there you go. That's the fear and greed index. let's quickly take a look in terms of what the ETF, the Bitcoin ETF, doing for the week. For yesterday, that's the 4th of December. Wow, Bitcoin actually sold off big time. So yesterday, Bitcoin ETF, big sell-off, outflow of approximately 194 million. Okay, and the day before, the 3rd of December, Bitcoin was also an outflow of 14.9 million. So definitely today it was a bigger sell-off. But having said that, I think for the past few consecutive days, before 1, 2, 3, 4, 5, the 5 consecutive for the 5 consecutive day, it came to close to about 365 million inflow, right? So I guess there will always be outflow of some sort. And for Ethereum, let me quick look. Ethereum yesterday was also an outflow of 41.5 million. Okay, but the day before it was about 140 million inflow. And Solana ETF, Sol ETF, yesterday it was 4.2 million inflow, right? Not outflow. So Solana was the only one that delivers inflow, but certainly for Solana, there had been some huge outflow the day before. That was around 33 million. Okay, so plenty of outflows for Bitcoin and Ethereum. Okay, so now let's quickly check on the news. What are some of the key news from yesterday, right? I think what's worthwhile to probably call out will be poly markets, right? I think the prediction market are predicting that they could well be a 25 basis point rate cut coming, right? So that side of prediction has gone up from, I think previous day was around 89 or 86% to now 93%. Okay, so definitely expecting some cut there. Why will there be cuts, right? I think there has been some data that are coming from the US government. So US inflation is dropping again, right? So that's very good. I mean, especially for us that are expecting a rate cut, right? So it has now dropped to approximately 2.4% from the high of 2.7% in November. That is November, not December, right? And this is a major macro signal for the market. So of course, lower inflation reduces pressure on Fed, and we shall hoping for a likely of rate cut. And of course, hopefully more liquidity will be flowing back to the system, and that kind of signals risk on asset will have the most benefits, right? So your Mag 7 growth stocks, your Bitcoin, your crypto, and all of that will be beneficial from the rate cut. So hopefully we get to steal some of that gold liquidity, silver liquidity away. Okay, and of course, I think US jobless claims data came in at approximately 191,000. The expectation was 220,000. So yesterday's ADP US private payroll data fell to 32,000, which is the largest drop since March 2023, right? So a huge amount of job losses in the US. I kind of felt that it's all over, the world too. Like even HP, such a huge company, they're also laying off people. So recently I just felt not just the US, but in the UK, in Asia. Wow, in Asia it's pretty brutal too. Plenty of people are simply, don't have a job because there just isn't enough liquidity flowing through the system, right? And looking at other side of the world, Japan's bond market definitely is flashing a major warning signal, where Japan's 30-year bond yield just hit a record 3.43%, the highest ever, right? I think the day before it was something like 1.9%. Now it's gone up to about 3.43%. Wow, right? So 10-year bond yield is at 18 years high. 20-year bond yield, it's near a 26-year high, right? Wow, I think that's not exactly great. I mean, for a lot of investors, right? So I think because of such overnight announcement, so this was like yesterday from Japan. Okay, so I think it will have some cascading effect, especially a lot of traders or institutions that may borrow some money from Japan, carry trade they call it, and then they go about in taking that money, taking that loan, to fund off their buying of assets in other countries that would give them higher yield, right? So as a result, a lot more people will be hit by this because of higher interest rate that they will need to pay back, and very likely they might sell off their assets somewhere else to pay off this loan, right? And very likely, they'll probably also be buying more Japanese bonds, right? So there are pros and cons. I think immediate effect that we may see a more volatile market in coming few more days because of the sell-off. But at the same time, why is this a pro thing? Because it means less liquidity in the system, in the US. So that's why US Fed would probably need to step in and do more money printing, right? So immediately yesterday we saw some sort of money printing or quantitative easing that you guys might want to call it. US Treasury has just bought back 12.5 billion of its own debt. This is the largest buyback ever in US history. Wow, right? Okay, I can't say wow. It's kind of like tiny in comparison to like the COVID-19 type of quantitative easing. I think it was like 50-60 billions like on a monthly basis, right? So this is still a little tiny minute quantitative easing, right? So that buyback essentially means liquidity support to, I think, very likely to the US banking system. So hopefully we should later see some risk assets pump. So hopefully that gets cascaded down to Bitcoin, Max 7, crypto, and so forth. And these are the news that we want, right? Yeah, and that's pretty much it for the US. So I want to close the video with something exciting, a video. So you're obviously watching my video. I'm gonna play you another video from my phone. Essentially it's from Tom Lee. I think everyone key players attended some sort of a Dubai Binance blockchain week. That's something that Tom Lee spoke about on stage. Hopefully you should be able to hear it. Here we go.
Industrial cycle, if the industrial cycle is no longer following a 4-year cycle, and copper gold isn't following a 4-year cycle, I'm going to say I don't know if Bitcoin should follow a 4-year cycle. So I'm not in the camp that Bitcoin price has peaked. And the only way we'll know is if we make new highs in January, which is our bet. Okay. If the industrial cycle is no longer following a 4-year cycle.
Yep, you hear that.
And copper gold isn't.
So even Tom Lee believed that there's no more 4-year cycle. That's fine. I think from my indication is 4-year cycle has ended. The Bitcoin 4-year cycle has ended, or may already have ended. We are kind of going into the bear situation now for 4-year cycle, but potentially they could be a relief rally or a new wave of rally that are being driven by the business cycle, right? So it's good that to hear from Tom Lee, he's still very confident about not being in the 4-year cycle, and potentially there could be more relief rally coming our way. Okay, so watch this space. That's it for this morning. Hit the like, hit subscribe, become my 13th, 14th, 15th subscriber. I'll be really appreciative of that. Okay, have a great day, and I'll see you in the next video. Goodbye.